So, Cecilia, no matter what happens, we seem to be going up and up and up. It does seem to be the line of least resistance. What are you making of the markets, generally speaking, equities in particular?
Actually, for equity, we see that there is opportunity for the sector rotation. Say earlier in the year, the market had been focused a lot on growth and quality growth type of stock. And then recently, they have shifted into some older economy or some banking sectors or energies to price in the growth restorations globally. And so I think these is a matter of sector or thematic rotations in the market that is happening.
So, Cecilia, of course, this whole relief package, which has now been signed into law by President Biden, was one reason why we saw such optimism out there with all that money being pumped into the economic system. Is the market now looking perhaps 2 months ahead and looking forward to a big spend on infrastructure now?
Yeah, I think generally, overall, there will be a positive boost on growth, on consumptions, on investment, etc. And then the market will recently have moved in. The focus have been like higher U.S. Treasury yield or potential inflation risk. But we see that as a temporary phenomenon and give a good reason. Say for Asian market in particular, including China, we had some good corrections. And I think it provides some good platform, some cheaper value for the market to move up in the later in the year. Fundamentally, market focus will be still on growth. Growth recovery in the coming months, and I think even from the macro policy, both on fiscal and monetary policy, it will continue to offer supportive policy for growth restorations.
Cecilia, $1.9 trillion in stimulus getting into the bank accounts of Americans. How do you get that exposure here in Asia? Should we be looking at retail? Should we be looking at hospitality, travel?
I think for the what was good about the Biden's package is confirm the government's confirm the policy incentive to support growth restorations globally. You say in U.S. and so as in Europe, we see the macro policy is also supportive for growth. So give us a good platform and a good reference in Asia as well in terms of the prospect for growth and confirmations there. So that is a positive for fundamentals in terms of growth story moving forward. So it's good news to Asia, and but then later on in the year, it will depend on how much growth is materialized as expected. The market focus may shift later on. But in the coming 2 months, I will see market will continue to focus on the growth phenomenon.
Cecilia, what do you make of the bond market? We have Ray Dalio saying that bonds are a bad bet. In fact, he says that any U.S. denominated assets are bad bets.
No, I don't particularly agree with that. I think for bonds, yeah, I think we know that the Fed is going to keep zero monetary policy, rate policy for longer, and so we know that the short-dated interest rate will continue to stay close to zero at very low level. So anything that offer you positive yield carry seems to be a good investment already. But whether you will choose more risky asset or lower risk asset will depend on your risk profile. So I think for U.S. government bonds, for instance, in our asset allocation level, we have underweight, mainly because global, we know that say we for the global bonds, I mean there are areas like in Japan and Europe we had negative rate. So in terms of yield carry, it's not attractive at all. But for U.S. Treasury curve, it have some positive yield pickup, and also their credit spread as well. If you look at the credit bonds, say there are good credit spread, especially in Asia, and we can still have a good yield pickup story there. So I think Asian credit bond is still offer you value. I mean, it's all part of the bond asset class, but you will expect to outperform government bonds.
Let's take a look at Chinese bonds in particular. I mean, Bloomberg running a report today saying that some Chinese companies, which were seen to be credit-worthy, most credit-worthy, are likely to default. What do you make of that? I mean, when the ratings are unreliable.
Well, actually, interesting you mentioned about renminbi bonds. I mean, renminbi bonds fundamentally on the macro level, in terms of monetary policy, it does offer very good diversifications from the global interest rate regime. Like because in China we have their monetary policy is quite independent, quite different in a different cycle compared with global economy. And also with the yield curve is positive level across the curve from 2.2 in the money market rate to 3.5 at that type of level. So it's a positive government curve. So even on government bond universe, it is an attractive level. And then in terms of credit spread, in terms of choice of credit, it is one have to be very selective. And so far as foreign investor, we have been focusing on some better quality one. And some have international rating. We have been very selective, focus on bonds that are issuers that have international rating or even for local. Sorry? And then
Cecilia, just because we haven't got much time, I just wanted to, you won't be able to see this chart, but we're going back to the Chinese equity side of things. And very quickly, we've seen that Chinese equities have lagged the global rally by the most since 2016. Now, is this the time to be buying them as they are so down compared to what's been going on elsewhere? Very quickly.
The Chinese equity, it had a very strong rally early this year, but after Chinese New Year's, it had a big correction. But we think that is a temporary correction, and it offers some better value for people to get back to the market with the selections, maybe another perspective of stock selection opportunities. Focus more on diversified theme, maybe focus more on the old economy and a more balanced risk portfolio when we look at rather than just focusing on growth.